Test, test. Are we live? I think we're live. Welcome, ladies and gentlemen. If you're watching this, you're most likely watching the recap of the live stream. We're live. Market open to market close Monday through Friday. Make sure you hit that like button. Also hit that subscribe and notification bell so you can be notified the second we go live. And also when we post videos. Today should be another beautiful day. I hope you guys are ready. I'm excited. I'm excited. Oh shit, I want to kind of do a spy play here, but it's really early in the morning. Usually don't like doing them this early. But we are already going up towards the level I want to play. It's just, got to see if we break past it. What's up, Trisha? Hope you're having a good morning so far. Glad to see you here. It's so early. I don't think I should be doing a play here. I kind of want to, though. This is the level. Yeah, I think we already missed the entrance. Fuck. That's lame. Yep, we already missed it. Son of a bitch. I'm not mad at all, I swear. That's so stupid, bro. Ugh. Maybe I'll get lucky and I'll get one more chance, but I think I fucked it up already. Damn, Zillow's 121 now? Are you fucking kidding me? That thing is getting so obliterated. Son of a bitch, bro. I missed the spy entrance. No. Whatever, bro. That's so lame. God. That's so annoying. I'm going to buy one share of Apple on my other account here. Or not. It's not going to fill me on it. Freaking cat, bro. Really? You're not going to fill me on it? That's crazy. Thank you. Thank you. A lot of shortages? What do you mean? What you mean? Um, yeah, I don't know. I like I said, I always say, I literally don't pay attention to that kind of stuff. Makes sense though. Manufacturing data was really bad yesterday. I didn't actually look at it though. Probably should do that. I guess it wasn't that bad, but it is lower than normal. I don't know. It's just gonna make prices go up, make inflation seem higher. What's up, NSO? Hope you're having a good I can't talk. Hope you're having a good day so far. Tire shortage. Yeah, I don't know. Dude, Zillow is getting fucking hammered. That's so bad. I might need to average down on this. Like, this is terrible. I really don't want to buy more. This is fucked. I've already got so much. Don't they have earnings today? Let's trade on Microsoft. Depends. Is it an option or is it shares? Because if it's shares, it doesn't matter. You just hold the shares. Microsoft's a long-term company. If it's an option, then I can't tell you what to do. That's on you. I just don't. If all you're trading is shares, I don't get why you would even want to sell that. It's literally one of the best companies in the world. Just hold it. Like, bro, I'm down like $1,000 already this week. You think I'm gonna liquidate my long term because I'm down $1,000? Nah, like I don't care, bro. Just fucking hold it. Just hold it. Like I said, if it's options though, I can't help you there. That's on you. I don't know why you would sell literally one of the best companies in the world at a loss if you had shares of it. Doesn't really uh doesn't really make sense to me. Yeah, but your app doesn't know shit. Your app wants you to lose money. I don't care what your app says. Like, literally, it's you shouldn't let a fucking app tell you what to do. That's why technical analysis is so stupid. You're literally letting a platform tell you when to trade. Like, you got to think for yourself. Like, why would you sell one of the best companies in the world just because you're down on it? Like, look at this. Look at this long term I just started. I told you guys I would show you this. This is the long term. This is what the title's about. Boom, 67,000. I literally just started this yesterday, and we're already down $20. You think I'm gonna come over here and sell everything because I'm down $20? Nah, that's how you build a long term. You just fucking buy good solid companies and you just hold them. Like, if you're focusing on what's happening right now, then you're not building a long term, or you're not even thinking about the long term. You're just thinking about what's happening right now. And that's not how you make money. and that account's real money. That's not even paper money. It's a real account. Funniest part about that account is it's not even my money. And I'm still not tripping because I know what the outcome's going to be in the long term. You're literally not taking a risk, though. You have shares of literally, like, you have shares of the best company in the world. How is that taking a risk? Like, if it goes down that low, buy fucking more. You're not thinking about it how you should be thinking about it. You're literally only thinking about what's happening right now. You're not even thinking about the future. No, it's not. It's not funny either. Like, I'm being dead serious. I'm not even trying to be funny. Like, you're literally only thinking about what's happening right now. Like, fuck what's happening right now. Let it drop to $200. Buy more. Shit, I'll buy some if it drops to $200. I ain't tripping on that. It's the best literally one of the best companies in the world. Why would I care if it falls? If you sell it, you're just going to lose money. That's all that's going to happen. You might think you're saving yourself from whatever outcome you think is going to happen, but you're just going to lose money if you sell it. If you just hold it, you'll be fine. Yeah, well, I mean, stop trading. Build a long term, bro. Like, if you're tripping about a trade like that and it's shares, like, don't even trade. Just build a long term. I'm telling you, like, you're wasting your time trying to trade if that's how you're going to approach it. I'm telling you. Like, you're literally just going to waste your time. And I'm not even trying to be, like, rude about it. Like, I'm being dead serious. If that's literally how you're going to think about trading, you're going to sell shares of literally the best company in the world just because it is gonna go down for like a week or two. Like, you're not going to make money that way. If you want to trade, you need to time your entries better. But I don't even think you should trade. I think you should just start a long term and build it and watch what happens. And like actually do it. Don't just say that you want to or say you're going to do it. Like, actually do it. I know how people are. Literally. Oh, I'll start the long term tomorrow. Oh, I'll start it next week. I'll start it right after this option trade. Nah, start it right now. Keep building it. Like, screw trading. The richest people in the world didn't get rich trading. They got rich by investing in some of the best companies in the world. Putting more in today. Let's go. You got that job money now, too. That's lit. That job money. Like, if you really want to make money, NSO, just do what I told you to do yesterday. Just close the stream, close all your applications, close your computer, laptop, whatever you have, turn it off, and go get a job. Go to work. Like, I'm telling you. Build your long term and work. Next 5 years, 10 years, if that doesn't change your life, then I'll be very surprised. But sitting here trying to trade, trying to chase gains, not building the long term, I can promise you that's how you're going to be sitting here in the same spot for the next 5-10 years until you figure out, oh shit, I should have just started the long term. Like, I know it doesn't sound good. It doesn't sound attractive. It sounds fucking stupid, but it's the facts of it. Like, if you really want to fucking be successful and you want to change your life, build the long term and work. Start building a business. Get into real estate. Like, you don't need to be a trader. I'm telling you. Trading is just like this weird fucking fantasy everyone's chasing. But I don't know. I don't agree with it. You gonna show the purchases you made so far? Oh yeah, I've purchased a few things. I finally got it set up. This is the portfolio so far. Got one Apple, 10 AMDs, one Baba, one Microsoft, and one Qualcomm. All of them are clapped right now because the market is going down, but that doesn't matter. It's a long term. It's not a, we just wait. We'll just wait. Patience. All good, solid companies, though. It's no SPACs, no fucking IPOs, nothing. So it's going to be only good companies. And just watch. Time will play out. We might be down for a little bit, for a month maybe, week or two. I don't know. Depends how long the market trades like this. But the most important part is we're starting. Bro, I'm kind of annoyed I didn't get that SPY trade this morning, dude. That thing was... This was so good this morning, bro. Would have been helpful. Damn. Getting some aggressive movement on the way down here. We don't even have any puts. Nice buys. We'll see. I mean, realistically, I ain't tripping on it. It's just time will play out. Honestly, hopefully we go down more, so I can get some more or some better pickups. I think Robinhood's down. I keep seeing tweets about it. Yep. Robinhood's down. People are freaking out about it on Twitter. Dude, this is actually a pretty aggressive down day, bro. Definitely one of the bigger days we've had so far. But the day just started. Yeah, we're already down 1.7% on the Nasdaq and 1% on the S&P. Like, that's pretty big considering how we've been trading the past week or two. Where's fucking crypto at? Whoops. Is crypto selling off like this? Nah, Bitcoin's holding up. Ethereum's up more. Jesus Christ, Dogecoin's at 60 fucking cents. Or almost 60 cents. What the hell? That's so funny. Why is Dogecoin at 60 cents, bro? That's crazy. That's crazy. Fucking Dogecoin. Fucking Dogecoin. Ooh, how much cash do I got in here? Damn. I kind of want to buy another share of Amazon if it drops below 3,300. My E-Trade just froze, so that's cool. Gotta love that. That was weird. Where's the dollar? Dollar kind of gapped up today. Still not as that big. Jeez, Coinbase is at 277. What the heck? This thing is getting murdered. That's crazy, dude. Crypto is at the moon already. I don't know. I don't know if it can. I mean, fuck, I don't know. It's already at the moon though. It's far. It's far from the moon. Far from the moon. Seeing a little bit of rotation into more value names. Ugh. That spy play would have been good this morning. But, you know. Probably clapped on the long term. Yeah, damn. See, we're almost down $1,000 just on the day. That's crazy. Not like I'm gonna turn around and go sell everything though. Just fucking hold it. Hold up. Hey. All my who we thinking we soft. We don't play. We gonna rock until the wheels fall off. All my people who think we selling long terms off. We don't play. We gonna hold till the wheels fall off. Damn, down 2% on the Nasdaq, 1.17 on the S&P. Dow's about to be down 1%. No one believes me? Bro, it's fucking 1 day of red. You're going to say the market's going to crash off 1 day of red? We literally just bounced off of the the resistance level. I doubt we'll see any lower than this. I still don't believe you. It's literally 1 day of red. Like, that's some like Meet Kevin shit. Oh my gosh, the market fell off 2% today. It's going to crash. Ah! Ah! Oh god. Oh god, it's crashing. Ah, sell everything. Sell it all. Oh no. I'm just fucking with you, but for real, I ain't tripping on it. It's not even that big of a red day, really. Like 2% on the Nasdaq's a lot, obviously, but at least it's not no like 3-4%. You know. Crypto crashes. That's probably why the market's going down today. Fucking Dogecoin almost hit 60 cents. Ethereum's going insane. I don't even know if there's any news like why would we would be going down like this. I haven't seen any. It's good. It's good. I hope it goes down more so I can buy a grip load on this new account. The only thing I'm sad about is I didn't get my fucking SPY put this morning. Literally bounced right bounced right off that 70 level. We would have made like, I mean, if we would have held through the whole thing, it would have been like 200%. Biden set the migration higher. What? Pretty sure that wouldn't. I don't think that would affect the stock market. No, everyone's just gonna chase the next best thing. It's like, oh my gosh, Doge. Doge. I don't know. I'll be really surprised if we drop any lower than this on the S&P. Well, I mean, at least on the day. Tomorrow we might see 41.18. Well, that's on the futures, but I don't know what that would be on the SPY. Like 4.11. We'll probably see that. And then if we fall from there, I don't know. Might get a little dangerous, but yeah. That's what I am kind of expecting. Jeez. Just down, down, down to the burning ring of fire. And it burns, burns, burns. The ring of fire. The ring of fire. Funny thing is Robinhood's clapped right now. They won't even let people sell their Dogecoin. Or I guess Ethereum. I mean, it's probably because of Dogecoin, realistically, but love is a burning thing. And it makes a fiery ring. Today's a nice red day. Whew, yeah, it's a good one. I think we're down 1,000. Oh no, not quite. We're almost there. We need a little more downside, and we'd be down 1,000. That'd be lit. I should really probably average down on my Zillow here. But I'm scared. What if their earnings suck? And it gets more clapped. What if it gets more clapped? I don't know. They have earnings after hours. So I don't know. Do I just run it? Dude, this thing got obliterated. Mm. I don't know. Robinhood's gonna. Why were you banned from Robinhood? How do you even get banned from Robinhood? Doesn't make no sense. Doge and Ethereum. It's lit. It's lit. I gotta do it. Unfortunately, I don't necessarily want to, but I gots to. How much is 5 more shares? $600? Shit. Ah. I'll buy 4 more. I think that's fair. They changed the price on me though. These fuckers, bro. Of course it bounces 50 cents right as I'm about to fucking place the order. These hoes, man. These hoes. It always does this to me, I swear. Dude, it keeps bouncing every time I'm about to place the order. Come on. Stop it. Stop it. No. You motherfucker. This is annoying. Oh, yeah. Banned for 90 days. That's weird. I don't know how you get banned from Robinhood. Yeah, screw Dogecoin. I wouldn't regret not buying Dogecoin. Really? Sounds like not a very good regret. No regrets. Yeah, everything's getting clapped. It's kind of interesting. Doesn't smell like weed at all. Cut that bitch open. It's probably just shake, honestly. It's what they do with all their shake. They just put it into pre-rolls. And then they cover it in fucking whatever. Distillate and keef and shit. That's how they get you. It's the top shelf shake. It's 80% leaves, 5% stems, and the rest. What's it that Apple's dealing with? I have no clue. Probably the market being down 2%. Usually growth stocks don't react very well when the market's getting clapped. I have no clue. I don't I literally you guys think like I'm like so up to date, but I'm really not. Like I don't pay attention to the news. Like I pay attention to the news as it comes out during the day, but once the market closes, like I don't look at stocks. I don't look at the news. Like I don't care what's happening when the market's closed. Like I just come here, do my thing. If there's something important, then yeah, I'll remember it, but like something like that's not important. I don't think. Like if I see news about I don't know. I don't know. I just don't. Yeah. If it was a real market sell off, there wouldn't be rotations on the high ticker. Like you see CVS, you see Walmart, you see UNH, J&J, like you've seen a lot of your value names on the high ticker, so it's not a real market sell off. It's just a growth stock sell off because everyone's selling off their growth to probably go try and buy Dogecoin or whatever it may be. Who knows? Who knows these days? Polygon. Isn't that a Pokemon? I feel like we went through this already. I don't know what that is. I thought Polygon was a Pokemon. That's just me. Right? Isn't Polygon a Pokemon? Or is that yeah, Polygon's the little like I don't know what the hell that thing is. It has the little target on its face. Right? I'm looking it up. Polygon. Oh no, Polygon's a shape too. Oh yeah, this is that frickin' video game thing. Poliwag? I thought there was a evolution of Polygon. Oh, it's Porygon. That's what I'm thinking of. Porygon. That weird, like, crystal duck thing. And the other one's Poliwhirl. Or Poliwag and Poliwrath. Okay. Getting re-updated on my Pokemon here. Fucking Zillow. Ugh. Fucking Zillow, bro. I think it's funny. Zillow literally bounces $2 right when whatever. Whatever, Zillow. Have it your way. I don't even know what you're talking about. I wouldn't be buying anything that's under $1. That's not a long-term purchase. Buy a good solid company that you actually know what it is and you actually seen it and you've actually used it and you actually know it's going to be here in the next 5-10 years. If it's worth less than $1, it's probably not going to be here, most likely. Most likely. And even if it is, I mean, is it actually going to go above $1? Because I don't know about that. I don't trust penny stocks if you're talking about a penny stock. Penny stocks aren't long term. Orange Bud. Sounds great. Happy late birthday. I didn't know it was your birthday yesterday. You should have said something. But happy late birthday. Damn. Everything got clapped today. All right. I'm going to make a couple more purchases on that other long term. I'm going to buy just a couple average downs. I'm going to average 1 share of Quali World or Qualcomm, not yeah. I'm going to average down 1 share of Microsoft. And then I think everything else I'm just going to chill on for a little bit. I just wanted to do a couple average downs. I would average down on Baba, but I think Baba could drop to 220. We're just building this long term 1 step at a time. We don't need to rush nothing. I've literally got over 65K to spend, and I've only spent 2,000 of it. So we just taking our time. I kind of want to buy more AMD, but I think I don't know. Probably could just buy more here. But if I want to see it go to 75, and then I'll load up a lot more. Yeah, Ethereum's crazy, bro. It's crazy. But, I mean, let's find something on the dip. Find a good trade. We already know crypto's going crazy. Like, it's not beneficial. We can't make any opportunity off of crypto when it's sitting at all-time highs. So we got to find something else. What was I gonna do? I thought I was gonna. Nah, I don't want either of those yet. Like, don't just name off stocks. Like, go look for an option play. Like, that's a good price, a good play. Like, I could name off stocks all day. I got a watch list of every stock that's down, but I gotta go look at the options. Gotta go see if I actually want to trade it. Like, there's, you know. Although I may want to buy more shares of CCL. Yeah, I'll wait. It'll probably hit 25. Maybe. Boeing looks sketchy. I don't think I want that. Ooh, Roku. Wait, where's Netflix? Ooh, Netflix. Kind of want to buy my share of Netflix, but then I'm not going to be able to buy my Amazon if it comes down to that price I want. Call on Tesla. Well, what'd you play? I mean, you could have just bought shares of it. Shouldn't have an expectation coming into an option play. See what happens, though. I kind of want to buy this share. I don't want to see that. Gosh. That's why you just get a long term. Then you can just, then you don't have to worry about it. I guess it's either Netflix or Roku. What is this? Roku has earnings May 6th. Expensive. Groupon launches new personalized user experience. It's not really moving off that news. Got a lot of volume right there, though. Where's eBay? Corn hit $7 a bushel for the first time since 2013. What, now my charts are going to stop working? Thank you. It's time to smoke. Blaze all day, every day. Each way, my way. What is Matic? Like, what is this? Is this Matika Enterprises? Because if this is what you're talking about, I do not know why you even have this. That is, bro. I'm telling you, just get good quality companies. Like, as much as I talk about the long term, I don't know why anyone in here still even looks at penny stocks. Like, I don't know. It's not even like boomer stocks only. It's like, what are you trying to chase? You know? Like, what do you think you're going to get out of chasing all these weird random stocks? I just don't see the appeal. FedEx to reduce debt by 2.6 billion after bond offering. I think that's probably old news. Give it a chance, it might go over $1. But did you think about the future outlook of it? Bet you did not see appeal in MV. Yeah, of course I didn't, because those are all garbage. What's MVIS now? Oh, that's weird. Looks like it got pump and dumped. Interesting. Why would I buy that garbage? UAVs. Weird. Looks like it got pump and dumped. Weird. I don't know. BNGO. I'm sure this is a pump and dump too. Yep. Pretty self-explanatory. I think the chart tells it all. I don't know. Of course, I didn't buy that fucking garbage. That's crazy. Play it, not buy it. Why would I even play it? Why would I put my money into something that's absolute trash just to make a fucking, what, 10-20% gain? Ooh, man. Bro, I'm FOMOing so hard out of that 10-20% gain. I don't know, man. I don't know. $10 to 27. Oh, all right. That's 150%. Ooh, the FOMO, it's creeping. Ooh, I can feel it. The FOMO. Oh no, the FOMO. I missed 100% gain that happens every single day in the market. Oh no, the FOMO. Oh, 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 oh God. I literally see 100% gains every single day, but I'm gonna FOMO on 3 stocks. Man, that's crazy. That's crazy. I bet I could go find 1,000% option right now. And you're telling me that I care, and you think I care about those 3? Come on now. I could probably go find you 3,000% options. The tulip bubble? No, I don't know what that is. Dimwit. Well, now you're getting timed out, so please don't come back to my chat. You think I fucking care? Get a long term. You're crazy. The only reason if you hit those plays with options, which you probably didn't, I probably guarantee that, you just got lucky. So that's all there is to that. And if you literally can't see that you just got lucky, then I mean, good luck with the rest of your trading career, my friend. Let me come back in 5-10 years. I'll still be here. I don't know about you, but I'll still be here. One of the most famous market bubbles and crashes of all time. It occurred in Holland during the early and mid 1600s. With the value of tulip bulbs, the rarest tulip bulbs trading for as much as Sally. What the hell? Sounds like some like NFT shit. Nah, I've never heard of that. That sounds crazy. Goddamn. I can't get over that. That's funny, bro. Like, why would I even be looking at those stocks? Realistically. I'm about to Google it. Dutch tulip bulb. wouldn't be sad about that money lost. Why? Why don't you value your money? Skittles owner sues THC lace copycat Skittles for trademark infringement. That's funny. That's funny. That's great. Oh, that's amazing. But for real, like, value your money, bro. Like, what's the? I don't know. Like, why? I don't know, bro. Why does everyone say that? Why does nobody value their money? It's funny. It's funny because everyone wants to get rich. Everyone wants to hit all these big bags, but they don't fucking value their money. Like, it's crazy. Like, you're telling me you value your money, but you literally just said you don't mind losing on a play, on a long-term purchase. So you don't value it. If you valued it, you'd put it in something that is actually going to last, not something that you think is going to make a big move or die. Like, if you truly value your money, you're going to buy good assets, not try to gamble it. So you can't really say you value your money if that's how you look at it. Yeah, I know that. But maybe I don't value my money enough. Cuz I 100% know I shouldn't be trading options. I should only be buying long term. But I'd still do it anyway. So, I mean, maybe I don't value my money enough. I'm not saying it's just you. Like, it goes for me too. Yeah, but 10-20%'s a lot. Like, when I do an option play, I literally do $20, $40. I don't do no 10-20%. I don't even do 1% technically. It's like, I don't know. I don't know. feel a high, but a good high. That good high. So how much do you put in a week? How much do you put in a month? Is that all you've done? You've just $500 and that's it? Like, what are... I don't know if we'll see 412.50, but it's getting interesting. Need to consistently keep building it. Consistently add money to it. I don't know. You guys might think I'm just trying to Ripple appoints a former U.S. treasurer to its board in legal fight with the SEC. That's interesting. But you guys might think I'm just trying to keep you away from opportunity or these trades, whatever it may be, but it's not what I'm trying to do. I'm trying to make you look at the future instead of what's happening right now, which is very difficult for people to do. But that's what's going to separate the successful from the unsuccessful. all these people making money on these pump and dumps right now, whatever it is, like, they're not going to last. The people who are going to last are the people who are going to be able to handle what the market throws at them and stay on the path of building wealth instead of trying to chase it. I think it's funny. Then literally 19 seconds ago, one of my mentors just tweeted, "Money shouldn't even be a goal within your first 2 years. It should be skill." I like that. I like that. But like for real, like I don't know who's in here. Stream's kind of dead today, but I'm not trying to keep you guys away from opportunity. I want you guys to hit good trades. I want you guys to do your thing, but like I don't want you to waste your time because I've said it before, I say it again. Like I know plenty of people who have the same opportunity as I had, learned from the same person I learned from, and they never started the long term. They're just still doing the same shit they were doing 2 years ago. It's like I don't want you guys to do that because you think trading or chasing all this hype is going to be the way. Like it's not. I know. It's so enticing when Dogecoin's up fucking 20 cents and the stock market's down, you know, 1%, 2%, like, yeah, it's so enticing to go want to chase that, but like you got to look at the bigger picture. If you're really like FOMOing into that type of thing, then you're not looking at the bigger picture. Like you don't think I want to fucking go and make a bag off some crypto, but it's like, nah, fam. Why would I put my money in crypto? Everything's already up over thousands of percents. Why would I put my money in a pump and dump stock? Shit can turn around any second. Why would I buy a penny stock? I don't know. Maybe it's just different for me because I've been doing this for quite some time, and I've seen my account up and down, up and down. Shit, there was the beginning of the year when we were really getting clapped. I was almost, negative, completely negative on the long term. Like, I only had like 2,000 unrealized gain or something. We got clapped like $4,000 or something in a couple weeks. I still wasn't stressing. Like, the long-term outlook is going to beat everything. Me, bro. Super. There's really someone out there that's freaking what was I saying? My mind just like completely blanked out. um I think Yellen's live right now. That could be why the market's reacting. I literally forgot what I was saying though. Oh yeah. I don't know. I just think that's really amazing that someone out there in this world has been supporting this channel that long, 2 months, that's a long time, bro. And I mean, there's people in here that have been supporting the channel longer. They may not be members or whatever, but I just think that's cool. So, thank you, Stogie. Thank you to everyone who supports the channel, shows love, hangs out here. Even on the days when I'm not on the, even on days when I'm not in the best mood, and yeah, I just want to thank you guys. Secretary Yellen says rates may have to rise to somewhat keep economy from overheating. That could be why the market's reacting. We could watch Yellen live. This is a crazy down day, though. We should see about 4-1, or I guess I should check the SPY. I don't know what number that is on the SPY. Yeah, we should see 411.5 maybe, and then bounce from there if we keep selling off. But I don't think we'll go much lower than that. I mean, I guess we could see 410, but I really don't think we're going to see 410. My bounce target would be 411.5. Back up to that 416. I mean, that's just how I'm looking at it, though. Oh yeah, I want to show you guys a clip of did anyone watch the Berkshire Hathaway shareholder meeting like a week or two ago? I'm just curious if anyone watched that. How many people are even in here? Oh, there's only 2 people in here right now. Stream's dead today. Hella dead. Is there even anyone in here? It says there's 1 person in here. Jeez. If the stream's gonna be that dead, I'm just gonna fucking go do my thing. No, I can't even go do anything right now. Damn, this is getting pretty violent. Pretty violent red day. Alright, well, I guess since the stream's dead, I'm just going to continue to watch that Berkshire Hathaway meeting. Finish it. Oh, that was 2 days ago? I thought it was last week.
You know, we've talked about it. We've done when CP, when
the flexibility WGU offers really fits my life.
It truly is flexible. You know, I don't have to lock.
when Hunter Harrison or came after, was it Hunter that did on CP that kind of led the way, and we looked at buying CP. I mean, everybody looks at everything, and we would not pay this price, and it implies a price for BNSF that's even higher than what the UP is selling for. But it's kind of play money to some degree. I mean, when interest rates are this low, and I'm sure from the standpoint of both CP and CN, there's only one KC Southern, and they're not going to get a chance to expand. They're not going to buy us. They're not going to buy the UP, and the juices flow, and the prices go up, and
they're buying with somebody else's money.
Yeah, it's somebody else's money, and you're going to retire in 5 or 10 years, and people are not going to remember what you paid, but they're going to remember whether you built a larger system, and the investment bankers are cheering you on at every move. You know, they're saying you could pay more, and this is the, you know, they're moving the figures around, the spreadsheets are out, and the fees are flowing.
This question comes from Asher Haft in Brooklyn, who says, Asher's been a shareholder since 2006, says that he appreciates your honesty and candidness when it comes to explaining costly errors you made. In this year's chairman letter, you discussed that you made a mistake in 2016 when calculating Precision Castparts' average amount of future earnings, which resulted in Berkshire overpaying to acquire it. It appears that Precision's earnings declined substantially in 2020 because of the pandemic and the effect of airline and travel industry. What calculations could you have made in 2016 that might have altered your decision to acquire it? And secondly, are the problems Precision is currently facing larger than the pandemic?
Well, Berkshire didn't make the mistake. I made the mistake, incidentally. Anytime we look at buying a business, we're evaluating the competitive strengths of the business, the price we have to pay, the management we get, and everything. And we didn't make a mistake on the management, but in terms of the earning power on average, and you know, when
Hold up.
Boeing has troubles.
338.54. All right, I want to show you guys this part of this thing, this meeting. I think it's a really important part. Let's see. We're going to throw it up here. I just want to give you guys a look into the mind of this Mons. Or I guess a little look into the history. So, 338. I think it was right here. Maybe. Oh no, it was like, this whole part's pretty good. This whole like 10 minutes. I think right here. Or whole 10, 20 minutes.
You know, we have, last year, when you see those brackets around numbers, you got to start worrying. And first quarter, we actually showed a loss of almost $50 billion. I never thought I'd ever see a figure like that. And I was thinking back, I was trying to remember whether I'd gone on vacation during that quarter and turned things over to the other guys or what. But I checked the calendar, and that was me. That figure this year is a positive figure of $11.7 billion. And neither figure is very meaningful in itself. The Accounting Standards Board a few years ago, for many, 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 many years, unrealized gains or losses of a company like Berkshire were made adjustments to the net worth of Berkshire, but they did not run through earnings. And a few years ago, the rule was changed so that every time the stocks go up or down, it goes through our earnings account. So in the first quarter of last year, when stocks went down a lot, we had a huge sum of unrealized. Well, it was a reduction of unrealized gains largely. And when you start saying things like that, you start losing people. But that item was a mild plus this year. But if we reported earnings daily, you would see earnings one day of $3 billion, next day of minus $2 billion, and it's an accounting treatment that we don't think is particularly appropriate, but it's required, and we explain very carefully, both in our press releases that we try to explain, and And I try to write in my letter and explain why I don't think that's the way to look at Berkshire. We think over time that we will have investment gains for reasons I lay out in my letter. Over a period of time, the companies we own stock in retain earnings, and they use those reinvested earnings usually to our benefit, and that shows up in capital gains someday. But reported earnings for a company that has a lot of common stocks, marketable stocks like ours, you don't want to look at that final line, and you do want to look at the operating earnings line. Now, I would say that if you had taken the first 2 months of last year and compared to the first 2 months of this year, those figures would have been quite comparable. But of course, in March of 2020, the economy was shut down in effect. I mean, it was a self-induced recession, and an abrupt one, very abrupt. And so the economy went off a cliff in March. It was resurrected in an extraordinarily effective way by Federal Reserve action and later on the fiscal front by Congress, and we'll get into that later. But the figure you see that the difference was March, basically, the two. And our businesses have done, we'll get into more specifics later, but our business has done really quite well. This has been a very, very, very unusual recession in that it's been localized as to industry to an extraordinary extent. And right now, business is really very good in a great many segments of the economy, which we'll talk about later. But there's still problems if you're in the few types of business that have really been decimated, such as international air travel or something of the sort. So with that, we'll go back to the figures later on. Perhaps in some of the questions, I would like to just go over two items that I would like, particularly new entrants to the stock market, to ponder just a bit before they try and do 30 or 40 trades a day in order to profit from what looks like a very easy game. So I would like to go to slide L1. So put that up. And on March 31st, I ran off a list of the 20 largest companies in the world by stock market value. And those names, a good many of which will be familiar to you, but they were led by Apple at slightly over $2 trillion. And it went down to the number 20th was worth 330 odd billion. But those are the 20 largest companies in the world by market value on March 31st. Now, if I had I was hoping I could get a little quiz machine so I could have everybody weigh in on this answer, and we could flash it up a little later, but proved technically impossible. But what I would like you to do is look at that list. Starts off with Apple. Saudi Aramco is a pretty kind of a specialized company. It's I don't know whether it's 95% owned by the government or what, but it's essentially a country that's for sale there in terms of that business. But the top of the top 6 companies, 5 of them are American. So when you hear people say that America hasn't, it's not working very well or something of the sort, in the whole world, of the 6 top companies in value, 5 of them are in the United States. And if you think about it, we talked a little about this last year, but in 1790, we had 1/2 of 1% of the world's population. and a little less. We had 4 million people, 3.9 million people. 600,000 of them were slaves. Ireland had more people than the United States had. Russia had 5 times as many people as the U.S. did. Ukraine had twice as many people as the United States. So here we were. But what did we have? We had a map for the future, an aspirational map that somehow now only 200 and, well, after the Constitution, 232 years later, leaves us with 5 of the top 6 companies in the world. You know, it's not an accident, and it's not because we were way smarter, way stronger, you know, anything of the sort. We had good soil, had decent climate, but so some of those other countries I named, and the system has worked unbelievably well. Just imagine thinking of 5 of the top 6 companies in the world ending up with a country that started with 0.5% of the population just a few hundred years ago. But what I would like you to do is look at that list for a minute or two, if you want to, and then make an estimate, make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, you know, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. But what would you guess? And think about that yourself. Would you put on 5, 8? Well, whatever it would be, I would now invite you to look at slide 2, or L2, which goes back a little more than 30 years, and look at the top 20 from 1989. And if you look at the top 20 from 1989, there's 2 things that should grab your interest, at least 2. None of the 20 from 30 years ago are on the present list. None. 0. There were then 6 U.S. companies on the list, and their names are familiar to you. We have General Electric, we have Exxon, we have IBM Corp. I mean, they're still around. Merck is down there at number. None made it to the list 30 years later, 0. And I would guess that very few of you, when I asked you to play the quiz a few minutes ago, would have put down 0. And I don't think it will be 0. But it is a reminder of what extraordinary things can happen, things that seem obvious to you. Japan had this wonderful bull market for a very long time, so you had a number of Japanese companies on the list. Today there are none. And the United States had the 6. Now we have 13. But they aren't the same 6. I would invite you to think about one other thing as you look at this list. 1989 was not the Dark Ages. I mean, we weren't just discovering capitalism or anything else. And people thought they knew a lot about the stock market and the efficient market theory was in, and it was not a backward time. And if you look, the top company at that time had a market value of 100 billion, 104 billion. So the largest company in the world, Tidal, in just a shade over 30 years, has gone from 100 billion to 2 trillion. At the bottom, the number 20 has gone from 34 billion to something a little over 10 times that. Well, that tells you something about what's happened with equality, which is a hot subject in this country. It tells you a little bit about inflation, but this was not a highly inflationary period as a whole. But it tells you that capitalism has worked incredibly well, especially for the capitalists. And it's a pretty astounding number. Do you think it could be repeated now that 30 years from now that you could take 2 trillion for Apple, multiply any company and come up with 30 times that for the leader. It seems impossible, and maybe it is impossible. But we were just as sure of ourselves as investors and Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. And I'll just give you one other example you might ponder. This is when you start feeling too sure of yourself. One thing it shows, incidentally, is that it's a great argument for index funds. Is that the main thing to do was to be aboard the ship. A ship. They were all going to a better promised land. You just didn't know which one.
I think this is the part
one
right
they'd
here,
necessarily
so
get
please
on.
listen to this.
But you couldn't help but do well if you just had a diversified group of equities. U.S. equities would be my preference, but to hold over a 30-year period. But if you thought you knew a lot about which ones to pick, or the person that you had hiring, you were paying a lot of money to, had all these ideas, and they could tell you their best ideas in 1989 did not necessarily do that well, although overall equities were absolutely the place to be. Secondly, people get enormously attracted to various industries. I mean, they think if you know, if a company says it's in the XYZ industry and that's a popular one, you can sell IPOs, you can sell SPACs, people disregard sales numbers, earnings numbers. It's just, it's the place to be. So, Berkshire Hathaway, where was the place to be in 1903 when my dad was born in 1903, but that wasn't really that big of news. But it wasn't big news that actually Henry Ford was starting the Ford Motor Company. He'd failed a couple of times before, but he was about to change the world. I mean, the auto, when you think about everything, we've got a great auto insurance company, but if there weren't any autos, we wouldn't have Geico. But it transformed the country. And Henry Ford brought in the $5 daily wage, and that was a huge thing. Assembly lines, everything, autos came along. So let's just assume that you had seen a quick glance back in 1903 of all the interstate highways, 290 million vehicles on the road in the United States. Everything about it. And you say, well, this is pretty easy. It's going to be cars. It's going to be autos. Well, Berkshire, let's see what we've got up there. Yeah, no, say where you were. Go back. I don't want to change slides yet. Go back to the L's. The Berkshire, by accident, well, we own a company called Marmon. We bought it from the Pritzker family some years ago. The Pritzkers had built this business from many, many, many companies that they'd acquired. And the name of their company was Marmon. And I don't know exactly why Jay and Bob decided to name it Marmon, but they did own a company called Marmon. And the Marmon company had, getting slightly ahead of me on the slides again, but that's okay. We called it, they owned this company Marmon, which in 1911 had been the company whose car won the first Indianapolis 500. Maybe that's why they called it Marmon. They were proud of the fact that the company in 1911 won the first Indianapolis 500. It also was the company that invented the rearview mirror. I'm not sure whether that was a big contribution to society, and certainly around your household. Rearview mirror, you don't want to emphasize too much, but they the car that was entered in the Indianapolis 500, the guy who normally sat next to the driver and looked backwards to tell what what the competitors were doing. He was 6, so they invented the rear view mirror. So let's just assume that you decided that autos were this incredible thing, and someday there'd be an Indianapolis 500, and someday they'd have rear view mirrors on cars, and someday 290 million cars would be buzzing around the United States, or autos, or the county trucks there. And so I decided to look at the history, and I thought I'd put up the list of auto companies from over the years. And I was originally going to put up just the ones that were the M's so I could get them on one slide. But when I went to the M's, it went on and on and on. So I just decided to put up the ones that started with MA. And as you can see, there were almost 40 companies that went into the auto business, just starting with MA, including our Marmon there in the middle column, and which lasted for a while, quite a while. It was selling cars in the 1930s were really quite special. But in any event, there were at least 2,000 companies that entered the auto business because it clearly had this incredible future. And of course, you remember that in 2009, there were 3 left, 2 of which went bankrupt. So there is a lot more to picking stocks than figuring out what's going to be a wonderful industry in the future. The Maytag company put out a car. Allstate put out a car. DuPont put out a car. I mean, there was a Nebraska Motor Company. Everybody started car companies, just like everybody's starting something now that can be where you can get money from people. But there were very, very, very few people that picked the winner or got the opportunity. At Ford Motor, Henry Ford had a few partners, and he really didn't like them, so he figured a way to buy them out. That was sort of that was one. It was sort of the beginning of the auto finance. That's a long story. We won't get into that. But you couldn't buy into Ford Motor, and of course General Motors became the dominant company. Finally, when Henry Ford did not really make the shift from the Model T to the Model A, it did not work very well. So I just want to tell you, it's not as easy as it sounds. And with that, we will go to Becky Quick, and she will ask any of the 4 of us questions she has selected and which she doesn't share with us. And we will do this for a considerable period of time. You can be sending in questions to her, and then later on, after about 3.5 hours, we will have the annual meeting, which won't take long. So, Becky, over to you.
Thanks, Warren, and hello to everybody. This first question that came in from Andy Sees. He says he's the owner of not nearly enough B shares. He says, Mr. Buffett, you're well known for saying to be fearful when others are greedy and be greedy when others are fearful. But by all appearances, Berkshire was fearful when others were most fearful in the early months of COVID. Dumping airline stocks at or near the low, not taking advantage of the fear gripping the market to buy shares of public companies at exceptional discounts, and being hesitant to buy back significant amounts of Berkshire stock.
All right. I hope you guys listened to that part. That was very important. Yeah, I hope you could take something out of that. Just apply that automaker example to literally today. It's the exact same thing with all these EVs, wheat stocks. Like, there's only going to be a very select few of real winners. That's all you got to get out of that. But I'm going to go back to the spot I was at in the meeting, and then I'm probably going to listen to it for a while. And yeah, it's just nobody's talking in the stream, so might as well just chill. But I love you guys. God bless you.
we're evaluating the competitive strengths of the business, the price we have to pay, the management we get, and everything. And we didn't make a mistake on the management, but in terms of the
Yeah, make sure you guys get your
earning power
exercises.
on
They're good
average.
for you.
And when Boeing has troubles with the MAX, well, that's a probability. I mean, anytime any customer is a big, I mean, all kinds of things can happen, and we have seen some of those things happen, and therefore, I paid too much in relation to average earnings. It's a terrific company, and it's I'm happy with the management and everything, but GE doesn't need as many engines as we thought they would need, and they get into the power business and a variety of things. And we knew they're in the businesses, but we did not think those businesses would necessarily be in something close to a depression when other businesses that we bought end up sometimes doing better than we think. But we'll continue making mistakes. I mean, and I shouldn't say we will. I will. But even these other guys.
The rest of us will help.
and well, we've got some wonderful deals and some terrible deals, and the nice thing about it is, as I pointed out, this doesn't really apply in the case of Precision precisely, but when we're disappointed in a business, it usually becomes a smaller and smaller percentage of our business just by the nature of things, because it isn't going anyplace. And when we get a successful business like a Geico or something of the sort, Geico's they're doing 15 times as much business as when we bought Control in 1990. They become a proportionally much more important part of our mix. So you really get, through just natural forces, you get more of your money in the things that have developed more favorably than you thought. You actually end up getting a greater concentration in the ones that work out. It's not like, as Charlie would say, it's not like having children. I mean, the ones the bad ones cause you more problems. But in the children of businesses, the small ones kind of. By the way, we started with 3 businesses, Charlie and I, and Berkshire was textiles, Diversified Retailing was a department store, and Trading Stamps were Blue Chip's business. And those were the 3 companies we put together, and all 3 of the original businesses failed, which sort of gets me in terms of the people that are worried about don't we know that coal is going to be phased out over time? Of course we know coal is going to be, but that doesn't mean we're going to be phased out over time. I mean, that every business has some things to think about that way. The biggest danger, they have that section in the prospectus called, what do they call that? And about certain
Risk factors.
but risk factors, yeah. The number one risk factor, you never see it. The number one risk factor is that this business gets the wrong management, and you get a guy or a woman in charge of it that they're personable. The directors like them. They don't know what they're doing, but they know how to put on an appearance. That's the biggest single danger that a business, and that person stays and runs it for 10 or 15 years and either stays in the textile business or department store business and expands. I've looked at a lot of businesses, and that's what's caused the number one problem. And it isn't the kind of thing where they list them all because the lawyers tell them to list them.
This question comes from Raghu Bashwal, and it's for both Warren and Charlie. Now that the crypto market overall is valued at $2 trillion, do you still consider cryptos as worthless artificial gold?
Well, I knew there'd be a question on Bitcoin or crypto. And I thought to myself, well, I've watched these politicians dodge questions all the time, and I always find it kind of disgusting when they do it. But the truth is, I'm going to dodge that question because we probably got hundreds of thousands of people watching this that own Bitcoin, and we probably got 2 people that are short. So we got a choice of making 400,000 people mad at us and unhappy, or making 2 people happy, and that's just a dumb equation. So I thought about it. We had a governor one time in Nebraska, and a long time ago, but he would get a tough question, what do you think about property taxes, or, what should we do about schools? And he'd look right at the person, he'd say, I'm all right on that one. And then he'd just walk off. Well, I'm all right on that one, and maybe we'll see how Charlie is.
Well, those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success. And I don't welcome a currency that's so useful to kidnappers and extortionists and so forth, nor do I like just shuffling out a few extra billions and billions and billions of dollars to somebody who just invented a new financial product out of thin air. So I think I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization. And I'll leave the criticism to others.
I'm all right on that one.
The next question that comes in, or the next series of questions, are from James Hernandez. He has two questions, one for Ajit, one for Greg. They both concern Elon Musk. For Greg, this question is for you. Elon Musk has stated that Berkshire Hathaway's energy proposal for Texas, spending more than $9 billion for new generating capacity, is wrong. Instead, Mr. Musk argues that load balancing using battery storage is the appropriate course of action. Can you explain why the BHE proposal is the better course of action for Governor Abbott in the state of Texas? Specifically, what amount of savings can the citizens of Texas expect above and beyond what Mr. Musk is proposing?
Sure. So obviously there is a very unfortunate event in Texas in February, and it basically lasted 4 days. Many lives were lost. The economic damage was significant. Texas has highlighted that anywhere from 80 to $130 billion in incurred losses over that period of time. And I think when you look at the power sector, it fundamentally let the citizens down. It didn't perform as they expected. And then when it did perform, it was extremely expensive. They incurred billions and billions of dollars of energy costs versus a multiple of basically 10 times what they paid. They paid 10 times in energy costs over those 4 days what they paid in the past year. So a very substantial event for Texas. We've gone to Texas with what we believe is a good solution. We spent a lot of time pulling it together, understanding the fundamental issues around it. And our proposal is really based upon the fact that the health and welfare of Texans were at risk, and we needed to have effectively an insurance policy in place for them, that if they needed the power on very short notice, it would be able to be dispatched and it would be there for the 4 days. We're actually proposing it could be there for 7 days. And the fundamental concept of our proposal has always been, if there's a better proposal that's brought forward, we've accomplished our mission. We've just been really there to, it's the best proposal or option we could come up with, and obviously if Texas or Elon or someone else comes up with a better proposition, we've always said, Texas, you should pursue it. We strongly believe right now we have what remains is a very good proposal for Texas, and it'll continue to be discussed and evaluated. The big difference between a battery proposal and our proposal is that we will have power that can be generated continuously for 7 consistent days, where if you went to a battery solution, you may release that power that's been stored for 4 hours, but we're talking 4 days of a problem, not 4 hours. And it's just a completely different cost equation and solutions. So very proud that our team's brought forward what I thought was a very unique solution. We've worked hard with our suppliers and Peter Kiewit and Sons to put together what we believe is a firm cost that can also be delivered by November of 23. So again, we put a firm date on It won't be ready next winter, unfortunately. It won't be ready this summer, but it's a valuable solution, and one that we hope at least leads to the right discussion and the right long-term solution for the state.
Yeah, and we're also willing to put up $4 billion that if we don't deliver when we say we're going to deliver, we'll pay it as a penalty, basically. But we went to Kiewit, we went to General Electric and said, how long can we get turbines? And for that, if you're going to be prepared for 2023, you have to start at a point fairly soon, and you have inflation going on, and Kiewit's not going to change things on us in a month. We don't try to get the contracts all written out, but they had 100 people working on it.
Yeah, they had hundreds working on it.
And GE's cooperative and everything, but doesn't mean we have the best solution. We just know what we can do, and if anybody can do it faster, they can do it cheaper, whatever. That's terrific. But they should have something to lose, though, if they don't do it. I mean, and we will back our promise up by $4 billion, which, and we won't have any rinky-dink clauses in there that if this happens or that happens, we don't pay. Well, but we won't be able to do that a year from now. I mean, we can do it a year from now with the costs then from what they are then, and then it'll be a year further out. We want Texas. Texas is a terrific place to do business. We do a lot of business there, and it's where BNSF is headquartered. And it's a great place. And this was out of the blue, but one way or another, the nature of utility business is that you have to be prepared for something that probably isn't going to happen. And you don't want to say it's a 1 in 30-year event, and people die. I mean, you want a margin of safety in it, and we've got one solution, and other people may have other solutions, and we will cheer when a solution is reached of any kind, and we will cheer a little louder if it's ours.
Ajit, your question from this gentleman. Suppose the hypothetical situation arises where Warren Buffett calls you on the phone to tell you that Elon Musk has contacted him about writing an insurance policy on his proposed mission to and subsequent colonization of Mars. Specifically, he wants insurance to insure his SpaceX Heavy rocket, capsule, payload, and human capital. Would you underwrite any portion of a venture like that?
This is an easy one. No, thank you. I'll pass.
Well, I would say it would depend on the premium, and I would say that I would probably have a somewhat different rate if Elon was on board or not on board. I mean, it makes a difference. I mean, if somebody's asking you to insure something, so I would. That's called getting skin in the game, and
But in general, I would be very concerned about writing an insurance policy where Elon Musk is on the other side.
Okay.
Tell Elon to call me instead of Ajit.
This question comes from Michael Liu from California. This is for both Warren and Charlie. In your shareholder letter, you mentioned that the best investment results come from the companies that require minimum assets to conduct high-margin businesses. In today's world, many of these companies tend to be software-driven businesses. While Berkshire has avoided investing in high-growth technology companies in the past, this appears to be slowly changing with your investments in Apple and Snowflake. As shareholders, should we expect that high-margin businesses will begin to constitute a larger proportion of Berkshire's investment portfolio over time, particularly as Todd and Ted take on larger roles in the investment decision process?
Well, we've always known that the dream business is the one that takes very little capital and grows a lot. And Apple and Google and Microsoft and Facebook are terrific examples of that. I mean, Apple has $37 billion in property, plant, and equipment. Berkshire has $170 billion or something like that, and they're going to make a lot more money than we do. They're in better business. It's a much better business than we have. And so in Microsoft's business is a way better business than we have. Google's business is a way better business. We've always looked, we've known that a long time. We found that out with See's Candy in 1972. I mean, See's Candy just doesn't require that much capital. It doesn't have it has obviously a couple of manufacturing plants, they call them kitchens, and but it doesn't have big. It doesn't have big inventories except seasonally, for a short period. It doesn't have a lot of receivables. So those are the kind of businesses. They're the best businesses, but they command the best prices too. And there aren't that many of them, and they don't always stay that way. So we're looking for them all the time, and we've got a few that are pretty darn good, but we don't have anything as big as the big guys. But that's what everybody's looking for. That's what capitalism is about, people getting a return on capital. and the way you get it is having something that doesn't take too much capital. I mean, if you have to really put out tons and tons of capital, the utility business that way, it's not a super high return business. You just have to put out a lot of capital. You get a return on that capital, but you don't get fabulous returns. You don't get Google-like returns, or anything remotely close to it. We're proposing a return in the transaction with the proposition with Texas. I think it's a 9.3%.
Yeah, 9.3.
Yeah, and that. But if you look at the return on most American businesses on net tangible assets, it's a lot higher than 9.3. But they aren't utility businesses either.
Charlie, did you want to add anything to that?
No, thank.
Okay. This question is from Ryan Fasaro in New York City, who says Todd and Ted have taken on increased responsibility at Berkshire over the years, managing larger pools of capital, including the company's sizable Apple holdings, participating in M&A strategy, and even overseeing the company's now shuttered healthcare partnership with Amazon and JP Morgan. We are grateful for their efforts, but Todd and Ted are still not made available to shareholders at the annual meeting each year. Given their growing importance to the firm, can you discuss this policy and whether we can expect to hear from them more in the coming years?
They're both absolutely terrific, and that's one reason I don't want people quizzing them on stocks. They are assets of Berkshire, and just there's no reason for them to be out educating other people on how to compete with us. And it wouldn't. It always seems so silly that people expect. They don't expect Merck or Pfizer or something to tell them exactly what their scientists are working on, and where they stand and where the failures have been, so they can eliminate those. Yeah, if you've got talent that knows how to evaluate businesses, and those two fellows they've gone far beyond that. They're terrific assets, and they love Berkshire, and they work extraordinary hours, but we don't really want them going around with people asking them questions about why you like this industry better than that industry or anything of the sort.
This question's for Charlie. It comes from Stephen Tedder in Atlanta. He's been a Berkshire shareholder for 10 years and says, you and your friend Li Lu have been very optimistic with respect to investing opportunities in China. BYD has performed spectacularly for Berkshire since its initial purchase in 2008 and is currently valued at $5.8 billion. The Daily Journal recently bought a large position in Alibaba after founder Jack Ma had been reprimanded by the Chinese Communist Party, and Ma's other company, Ant, was not allowed to proceed with its IPO. What are your current thoughts on China and whether the communist leaders will allow businesses with strong leadership to flourish in decades to come?
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty. We're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism. And said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases.
Yeah.
And that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted $800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
In that list of the 20 most valuable companies, just 3 are Chinese. Now, if you're looking out 30 years, how many do you think will be Chinese? My guess is more, but I don't think they'll top the United States. But who knows? It's amazing what has been accomplished, and
Yeah, really amazing.
and they found what works. I mean, there's nothing like finding something works in order to sort of reinforce ideas over time, and we'll see what happens. But I would bet there will be more than 3, but I will bet the United States has more than China has, too.
This one comes from Tim Medley. Tim Medley in Jackson, Mississippi, who's been a Berkshire shareholder since 1987. He writes, on March 19th, respected economist Larry Summers, the former president of Harvard University and the former secretary of the Treasury under President Obama, was critical of President Joe Biden's $1.9 trillion American Rescue Stimulus Plan. In an interview with Bloomberg Television, he said, I am much more worried that we will have more inflation or that we will have a pretty dramatic fiscal monetary collision. This goes way beyond what is necessary. He said also, this is the least responsible macroeconomic policy we've had in the last 40 years. Your thoughts?
You're asking me on that?
He didn't write to who, so I guess it's anybody on the stage.
I would say that Larry's been reading his uncle's book, which was Paul Samuelson. But no, Larry is a very, very, very smart fellow, and he's laying out.
I don't really want to do this, but I'm gonna head out early today, actually. I mean, I might come back before the market ends, but yeah. There's nothing going on. Like, all the volatility was in the morning. Pretty much, market's pretty much dead for the rest of the day until like the last 5-10 minutes, but I'll probably be back before the market close. I'm gonna end the stream though, so that way if I do get back on, you guys will be able to know when I'm back. Yeah, it's super dead. Stream's kind of dead, but I love you guys. I really appreciate you hanging out here. God bless you. I'll talk to you guys later. I appreciate you.